The broadcast is now starting. All attendees are in listen-only mode.
All right, good evening, everybody. How are we doing tonight? Hey, Ed. Hey, Todd, everybody. Coming through loud and clear. Hear me and see my screen? Very good. Hey, Jeremy. All right, we got a lot of you guys on tonight. I know what you're saying. You're saying, uh-oh, it's John again. We're going to get yelled at, right? Hey, Mitzel, how you doing? Good, good. No yelling tonight. So Daryl kind of last minute asked me to cover the webinar here. He was getting a little tickle in his throat from some allergies, and we're going to let him rest up. We always love when Daryl teaches and does webinars for us, right? But we also want to make sure that he doesn't lose his voice and he's still good to go for the elite room in the mornings, right? So we definitely want to give him a little break here. So, well, good. I appreciate that, guys. All right, we're going to get started here. I'm going to do a little something different tonight with you guys. You know, and I'll be honest, when Daryl said, hey, will you cover the webinar tonight? I was like, sure, to figure out what I'm going to cover with these guys. But there's something I've been thinking a little about, because I have you guys ask me questions sometimes, asking, you know, John, what do you trade? Do you trade Sniper? Do you trade Simplicity? What do you trade? And you know, I hesitated to show you some of these things I'm going to show you tonight, because I don't want to distract you. You know, I mentioned last week, you know, we kind of talked about Sniper a little bit. You know, I talked to you about how, you know, Daryl taught Simplicity, and that was like the new shiny thing, and everybody gravitated to Simplicity, right? And you kind of forgot about Sniper. And for the last couple of weeks, we've gone back and reminded you, hey, you know, don't forget about Sniper. They're everywhere. And so I hesitated to show you anything different, because I don't want you to make a mistake. And I talked to you about that last time, to where when we teach you different things, it's not, hey, I'm going down one road, Daryl or John showed me a new road, so now I'm going down that one. And that's all I'm doing. And then here's a new thing, that's all I'm doing. I talked about how it's layers, right? To where these are new strategies, new system, multiple things to add on. And I want you to keep that in mind with what I'm showing you tonight. But what I'm showing you tonight is not a new system. It's not a new entry. It's just something else that I personally look at, that I feel helps me in my trading. And I look at this, and then I apply Simplicity or Sniper. Okay, so I'm not necessarily going to teach you a new strategy or setup. I'm going to teach you a whole new way to look at some markets. And for some of you, this might not be new. I've covered some of this before, but I want to show you a few different twists to it tonight. Okay, so how does that sound? A little bit different webinar. It's going to be more like, hey guys, this is just my personal trading, something I look at. This is a chart that I look at and how I use it. Take it how you will. It's not something to go off with tomorrow and that's all you're doing. It's just something to add in and give you a little bit of, you know, here's what I kind of look at. So a little bit different. Good? Okay. Well, let's get rolling here. Let's see here. So welcome to the webinar. As always, got to pop up the disclosures. Trading involves risk. Make sure you know what you're doing before you do it. Just a couple of quick reminders here. I mentioned to you last week that earnings season is going to be kicking off here, and it's something to be aware of if you're on the homepage of the Apex website. Up here under the links, just go to News Calendar and give that a second to pull up. It'll list out some of the upcoming news events you need to be aware of that can move the market. But if you scroll down right here, earnings, okay? You got NASDAQ earnings, YM earnings, right here are the earnings dates. Okay, so we've got some coming up here soon, right? October the 15th, October the 16th. This shows you the symbol, the company name, and then what time. Okay, a lot of them are early, right before the open or right after the close. So you need to be aware of those, especially the big ones, you know, like Google and Apple and Amazon. Those can really move the market, or sometimes right before those earnings announcements come out, the market will just get crazy zippy. Sometimes it'll just go flat, waiting, okay? So be aware of that, especially be aware of these end of the day ones. Like if you're holding a position right until close, you know, and you're trailing and trailing and trailing, let's say it's a simplicity trade, you need to be aware that that thing's coming out, you know, right at 4 or 4:15 or whatever, because that market could go against you hundreds of ticks in seconds, okay? So be aware of this. There's so much that we can't control, right? We don't know when something bad is going to happen in the world. We don't know when Trump's going to send out a tweet. Well, these things we know ahead of time, and you've got the information here. So make that part of your morning routine. Check news, check earnings, see what's happening that day, be aware, know what's going on. I talked to you about how in October here, we're going to run a big open house. That's actually going to kick off next Thursday, the 22nd. Okay, is where we're going to start kicking that off. You know, opening it back up to, you know, some new people, some old people, you know, offering the 30-day boot camp. I have a lot of newbies in. Daryl's going to really ramp things up in the elite room in the mornings as far as call-in trades and talking about the market, doing some training. We might go back to doing 2 webinars a week like we did one of our last open houses. In addition to that, I'll probably do 1 a week as well. So there's going to be some really, just a really big focus now that we've switched over to NT8, completely redone the training courses. If you haven't been able to go back through those, make sure to do that. But again, there's anybody you know, friends, family, neighbors, relatives that have expressed an interest in what you're doing and they want to learn to trade. It's a perfect time to tell them to come on board, then get in free, no credit card, new NT8, new courses. It's going to be a great time to jump in and learn, as we're going to be really, really digging in. Okay, so that's going to start next Thursday, so spread that word. Kind of covered this in the beginning, just, you know, how there had been the big focus on simplicity and wanted to get you back to sniper. And just keep in mind, anything that, you know, new or extra or an addition that we teach you, whether it's me or Lori or Daryl, don't get sidetracked on it and make that your 100% focus, okay? Still focus on your main things. Just realize there's layers. And what I want to talk to you tonight about, some of you that have been with us for a while might have been part of our, how many of you on here, we've got about 150 people on right now. How many of you were part of the Nadex Breakout Mastery course that I did a couple years ago? How many of y'all have watched that Breakout Mastery course? Okay, so quite a few of you. So for those of you that have taken that course, some of this is going to sound familiar in the beginning, okay? But I'm going to kind of take it to the next level. Let me pull over a chart here, okay? Let's just talk for a few minutes. Okay, so some of you are wondering, okay, what is this chart? I want to show you what this chart is. This is Apex Continuum bars. Okay, when you open a new chart, that's one of your options, Apex Continuum bars. And for this particular chart, I have it set at 50, 50, 1440, okay? What this means is a bar has to go up 50 ticks for it to close up, or it's got to go down 50 ticks for it to close down, okay? 1440 is just the time frame, meaning this chart kind of resets it, you know, every night at midnight and noon, or midnight, I believe. Yeah. Okay. So what that means, what the 1440 is, see right down here, at around midnight, you know, you'll have like not a full 50 tick bar. At midnight, it automatically starts a new bar. That's all this 1440 means. Okay. But 50-50 continuum bars. Again, what that means, just as an example here, bear with me. This bar right here, this green bar, okay? When this bar right here completed, this bar started forming, and the market has to go up 50 ticks, boom, to complete that as a green bar, an up bar, and then start a new bar. This one, the market came down 50 ticks, made a bar. Then a new bar started, went up 50 ticks. Everybody get that, right? 50-50. Okay, the market's got to move up 50 to make an up close bar, or down 50 to make a down close bar. This is a very big difference compared to our little 10-tick sniper charts, right? So on the sniper chart, a 10-tick bar really means 5 ticks of move to make a bar. This is 50 ticks to make a bar, okay? What I'm kind of going to talk to you tonight about is a very big, overview, 50 tick bars. And this is on NQ, okay? I'm not saying every market needs a 50-50, okay? You can play with it. Once you understand the concept I'm going to show you tonight, you can kind of play with other markets you watch. But so that's what this is, 50-50 continuum bars. And on this particular chart, I don't have a bunch of indicators. I'm just looking at the bars, okay? And what I want to talk to you about first, just to kind of set the foundation, is kind of the basic that I taught in the breakout course. Okay, I need to set that foundation first, and then we're going to take it to a different place. Is a different way to look at the market, okay? If you look at the market as, the big boys gathering contracts, gathering inventory, right? In order to build up that inventory and then to be able to shoot out one way or the other and get rid of that inventory, okay? Just like this is not the full, deep, in-depth, how the market works kind of talk, but you got to kind of think of it about like that. Like if you owned a store and you bought a bunch of inventory and you're building up inventory, then you have a big blowout sale, right? The other thing I've always equated it to is when you're a kid and you go outside in the backyard and you're playing with the water hose, right? You turn on the water hose and, you're playing with the hose, whatever. And what was it we always used to do? Like, oh, we're trying to get one of our brothers or sisters with the hose, but they run away just outside of where the hose can't reach them, right? And what did you do? The hose was on full blast, and what did you do? You kinked the hose, right? You kink the hose, and then it stops, and the pressure builds up. The hose builds up. It starts to back up, and it's just kinked up there. And then as soon as you unkink the hose, boom, it just shoots off, right? So it's what I've called kink and burst. And, I've always said I wish, looking back when I first started trading, that instead of watching all these, before I came to Apex, before watching all these ridiculous YouTube channel videos of this system and that system and this indicator and this crossover, I wish somebody would have helped me look at the market that way, kink and burst, okay? So I've talked to you about, let me zoom back in here, I'm sorry. Talk to you about what these bars are, right? So right here, market went down 50 ticks, down close bar, down 50 ticks, down 50 ticks, down 50 ticks, right? And then here, see the little wick, came down a little bit, went up 50 ticks, up close bar, up 50 ticks, up 50 ticks, up 50 ticks, right? Now, what happens here? Do you see this right here? We got an up close bar, so it means it went up 50 ticks. Then we had a little wick, and then what did it do? It came down 50 ticks, and then that closed, and then it went up 50 ticks, and then it went down 50 ticks, up 50, down, up. Do you guys see that right there? Okay. That's pretty easy to see that, isn't it? To spot that. What do you think is happening in the market right there? where it's up, down, up, down. Well, chop, right? But now it can also be considered a range or a choppy range, because you got to remember, these are 50 tick bars. Okay. You know, if we were looking at this on like a 10 tick chart, you know, that would be 10 bars up and a few more bars up and a couple bars down and then 10 bars down. This would look very different on a 10 tick chart, right? I mean, on a 10 tick chart, this area here would be up and down and up and down and up and down and all over the place. But in reality, it's a range. You're just not able to see it as clearly on your 10 tick chart. Does that make sense? Okay. So I like to look at these areas. You know what? Give me a second here. I'll try to pull up. I had a 10 tick chart up, but it got shut down. But we'll get to that. So you got to realize 50 ticks is just one bar right here, as to where it's 10 bars on your continuum chart, right? So this little thing you're seeing right here that goes from 1332 to 1401 as far as on the timestamp here, on your regular sniper chart, that's going to be all over the place, right? And if you really squeeze down your sniper chart or you really look at it just the right way zoomed, you could say, oh, I think we're in a range. It's just weird. But isn't it real easy to see it here, that you're in a range? When you've got down, up, down, up, down, up, down. It's very clear, right? And it's a lot easier to kind of, you know, draw a circle around it as well. Okay. Yeah, Todd. Todd says that chart on the Ninja platform. It is. If you in Ninja 8, you go to Open New Chart, you just have to choose Apex Continuum, and then this, you know, you can rewatch the first part of the webinar here. But for NQ and what I'm showing you here, I just put 50, 50, 140. Okay, and you open the chart. Okay, so this larger chart like this makes it very clear. Okay. To spot those ranges and to very easily see, you know, that they're forming and say, okay, you know, let me just do a, you know, drawing tool, rectangle, and okay, I'm just going to draw a rectangle, you know, as it's forming. You might be on bar 4, bar 5. All right. You just kind of drew your range right there. You see it? And so it's real easy to kind of see the top and bottom of that range. So just that part right there, how does that help you with sniper? Well, we know in range-bound markets, we only want to trade at the top or the bottom of the ranges going the opposite direction, correct? Now, you should be able to spot that on your diagnostic 10-tick chart. But sometimes as it's ranging all over and you got to look further back and zoom, you know, sometimes like, well, where is the top of that range? Yeah, are we in a range? Are we starting to trend? What are we doing here? So do you see how this can make it a little bit more clear for you? Okay. Now, also, I want you to focus on, for what I'm going to show you here today. Let me just get rid of this. Oh, get rid of this real quick. You'll notice all over the place, there's, you know, 2 bars. Well, that's an up close bar and a down close bar. I'm not really going to consider that chop. Okay. Even right here, there's an up close, down close, up close. For what I'm teaching you tonight, I'm not even really, that's not what I'm looking for. Okay. There were some certain rules and bar sizes in the breakout course for Nadex binaries. That's solely different. With what I look for in this is I like it to be 5 or 6 bars or more, okay, for what I like to see. And kind of back to the kink and burst situation. What do we have just right here? We got 1, 2, 3, 4, 5, 6. We got 7 bars here, right? In this chop area we were talking about, or what I call the kink. And then what happens on the burst? Well, you're used to looking at a 10-tick chart. So when you see, okay, John, this is cool, but I mean, 1 bar, 2 bar, 3 bars, 4 bar, that's just 4 bars. Like, why are you showing us this? Okay, remember, what size bars are these? These are 50 ticks bars. So that first bar is 50 ticks. This next bar is another 50 ticks. This next bar is another 50 ticks. This next bar is another 50 ticks. That's a 200 tick burst. Yeah, 50 points. So kink, burst. So until you wrap your mind around that, you're like, okay, that was 4 bars. That's not a big deal. Okay, they might not be as big a deal to you on a 10-tick chart, but those are 50 ticks each bar. So do you see what I'm trying to explain now? That when you see that kink, why you want to see that and be prepared for that, because what could possibly come out next? A burst, right? And I hear a lot of you say, hey, it's hard for me to really sit and focus for an hour or 2 hours and just really dig into the sniper trades. And I really like the sniper trades when the market's trending. How do I know when the market's going to trend? Well, if we all knew that, we'd be millionaires, right? But if I'm sitting here seeing 1 bar, 2 bar, 3 bar, 4 bar, 5 bar, 6 bar, would I maybe tell myself, hey, I've been kind of seeing those bars stack up like that, and I'm on the 6th bar. Should I maybe get ready and to go into focus mode? Because maybe here we go. Maybe this is when I really need to put some background music on and turn off the Facebook and really focus, because what if the market takes off and goes 200 or 250 ticks in a trend direction out of this breakout? I want to be ready. I want to be ready to take advantage of that. Does that make sense? Okay. So, guys, I see some questions coming in. I'll come back and answer those, okay? I won't forget about you, but let me move forward here. But guys, does that make sense? When you see it chopping, when you see it kinking up like this, get ready for the burst, right? Okay. So how do I use this chart myself? Okay, well, for me, sometimes it's hard for me to personally to, sit and trade and focus in the mornings for a few hours. You have Daryl and Lori in the room doing that with you guys in the morning. I sometimes am handling stuff in the back end of Apex or marketing or the help desk or working with, Ninja or whatever. Okay. Got a million other things going on. I'm not always able to just cut out time. So there's times where I'm juggling. I'm trying to do some of my own trading while I'm handling something in the help desk, or while I'm doing something for Dell, or while I'm on the phone, or while I'm whatever. And this personally, for me, really helps me, because I can keep an eye on this big chart and say, okay, man, I'm busy. I've got this going on. There's a Skype, there's a this. Man, okay, I see 3 bars, 4 bars. I'm going to watch this 5 bars. Here comes that 6th bar, let's say. And I'm putting all of you on hold. I'm not answering the phone. I'm not answering Skype, even if it's Daryl. And I'm waiting. It's like, hey, this is my time now. Because the market can break out and trend at any time, right? It can bust out of nowhere. But when you talk about possibilities and probabilities, it's possible that when you get a kink like this, it could bust out. But it's also pretty probable, right? By the way, you see the other one right over here on this same screen? Boom. See the other one right here? Boom. Notice you'll have some that are like 4. Sometimes the 4 after 4 of them, sometimes you'll get a burst, but sometimes you don't. That's where I like to see a little bit more, okay? So I like to watch this, and here's how I personally use it, okay? So I see it kinking up. Now guys, this is not a system. This is not an entry rule. This is not in any way going to tell you what direction it's going to go, okay? This is just a different way to look at the market. That's it, okay? I like to see the kink of at least 5 or 6 bars, the more the better. And then I want a full bar breakout myself, okay? So right here, for example, a kink, a full bar breakout. So if I'm seeing that live, is there times where you'll get a full bar breakout and then it fakes you out and goes the other way? Of course it does. Of course, okay? But I would like a full bar breakout. Notice what happens on this next bar here. So this bar right here closes up, right? Then this next bar starts. Does this bar go straight up, or do you get a wick right there? Get a wick. So what is that? The market kinked, it broke out, made a pullback, right? What happens in a trend? I mean, this is not the same move here, but what happens in a trend? The market will push one direction, does a pullback. Push further in that direction, does a pullback. Further in that direction, does a pullback. Further, right? Okay. So look at this. Okay. So let me just, and I know some of you get this and you're like, okay, I got it, John, move on. But some of you haven't seen this and you really got to understand this. Okay. So there's our kink in the hose, right? It pushes out and breaks out of that range. And then what do you think that wick right there is? A pullback, right? And then what does it do? Goes up, closes another 50-tick bar. And then what do you have here? Pretty big pullback. And then what does it do? Go up. Okay. So you've got your big kink, and then you've got a break of 200 ticks. So in that uptrend of 200 ticks, if you're trading sniper along the way, what are you looking for at every pullback and then push back up? Every pullback and then push back up. Every pullback and push back up. TX trades, right? You're also paying attention to OD and divergence up in there somewhere. But I know for most of you, your favorite sniper Xbox trades are trading with the trend, right? Correct? Okay. Let me ask you another question. Do you guys, is this little crosshair okay, or do you guys want the arrow? You want the arrow or the crosshair? Doesn't matter. Crosshair, arrow, I'm getting mixed here. Okay. So you guys understand that, right? You see this kink. Now, you see the break, the pullbacks, the break, the pullback, the break. It's a trend. You're looking for your sniper trades to go up. So you see divergence. Let me ask you another question. You see the kink, you get the confirmation of the 1 bar break. And again, guys, keep in mind, like this bar right here pushed down. Then see this wick, the market came down even more. So from here, this is like 25 ticks. The market went up 25 ticks, went up 50 ticks, went up another 50 ticks, right? The market's already come up quite a bit, okay? And that push up, see here, this bar closed at 47.11, 0106, 14. This was an hour. The market pushing up, 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 up. Let me ask you a question. With that much up movement in that long of a time, on a 30-second chart, what do you think has already lined up? Simplicity. So when you've got this kink and then you've got this burst breakout, this pullback right here you see in this wick, what trade has Daryl recently taught you about simplicity that you would think that would be right there? LRE, low risk entry. Light bulb just went off, Doug. Exactly. Now, Doug, I'm not picking on you, but Doug is like, you get sniper trades all day long. I mean, simplicity trades all day long, right? You also get low risk entries all day long, right? You have no idea what to expect. You have no idea, should I expect this to be a big, huge, potentially crazy simplicity trade? Should I expect this just to be a scalp? We never know. That's why we follow the rules, and that's why we have set stops, and that's why we have a trailing stop. But if I'm wondering, hey, possibility versus probability, where are the probable bigger simplicity moves? Any random simplicity or a big, huge kink that has its first little burst and then pulls back like a slingshot to finish the burst? Does that make sense, guys? Just that little part right there. Okay. We'll get there, Grant. Calm down, boy. Okay, so do you guys see what I mean? I'm not trying to teach you, this is not a new system. This is not a new entry. This is a way to see the market differently and maybe a way to set expectations and a way to be like, hey, I've seen several bars in a row kink up here. I need to get in focus mode. This is time to smack myself in the face, run to the bathroom, throw some cold water on my face, get some new coffee, because we're in a kink, we might have a burst, and I want to be ready for it. And I want to see the break, and then when I see that pullback starting to happen, I'm getting excited, because that's go time. That's on your mark, ready, set, go. Does that make sense, guys? Okay. Nick says, I use the 2020 1440. You know, Nicholas, I used 2020 for a long time. And I actually used 2020, I believe, on ES. But the way NQ has been for a while now, I've really found that I like the 50-50. Now that can change, okay, guys? I don't have a list for you to say on NQ use this and on ES use that. What you want to do is you don't want to have too many of them. Like if you go 10-10, you're going to have them everywhere, little chop thing. You don't want that. You want to see the big ones. So whatever market you're trading, you just got to kind of look, okay? And you'll understand what I mean by that after you play with this a little bit, okay? So guys, does that help at all? Like, do you see what I'm trying to show you here of a higher probability of, hey, I see this setting up, let me get ready. I see this setting up, there could be a really big burst. And also after that first burst out in the pullback, that's going to line up with a trending sniper trade. That should also line up with a pullback of a low risk entry simplicity trade. And guys, look at this. See where this bar pulled back? That wick is about half a bar. Like that's about 25 ticks. And then the bar itself is 50 ticks. That's 75 ticks just in this bar off that one pullback. Much less if you stayed in and got some more of it. Those are some big runs. Okay. I mean, look at this one. Now, granted, this was, European session. Okay. But I mean, here, 1, 2, 3, 4, 5, 6 bars, right? You get a breakout. We don't see a wick on here, but the wick, it could have come up into here and then pulled back. But look, I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 500 ticks. Then it chopped up again, 1, 2, 3, 4, 5. And you got another 150 out of it. Okay. Now, will there be times where, man, it chopped up here, and then what I call this is it took the elevator down one floor, boom, chopped a bunch again, took the elevator back up one floor, chopped a bunch again. See what I mean there? Where it's like chop, 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 boom, chop, 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 boom, chop, 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 chop. They don't always break out right away crazy, okay? But when you see this, 1 set, 2 sets, 3 sets, I guarantee you're about to get it. Well, I cannot use the word guarantee. High, super high probability you're about to get a super move, one way or the other. Do you see that? And that was a super move. You see it? Okay. I mean, guys, just let me scroll all the way over here. This was today. Were you guys in the room when Daryl, I believe one of the moves that Daryl caught was that big move up just before 11 o'clock, I believe. Did y'all see that? Yeah, guys, I'll show you the chart settings. Don't be sitting here trying to open in charts and make your charts. I'll go back through and show you how to make this chart. Follow along, okay? So did y'all see Daryl's trades from the day? I believe one of them was the big move up he caught this morning. Can anybody see where that move was? Or even if it wasn't the one he got, okay? You see it right here at 1039, 1040, 1046. I mean, guys, I don't need to give you a 4-hour webinar to spot up, down, up, down, up, down, up, down kink, right? You see the kink. It's there. It's just common sense what is probable to happen after a kink. Won't always happen, but it's probable. A burst out, pull back, shoot up. Real big pullback, shoot up, shoot up, shoot up. See it? Okay. Later in the day, right here, had this one. Yeah, only went up 100 ticks. That sucks, huh? Right? Fine. Even if we waited on this 50, we pull back here. That's still like 70 or 80 ticks in one freaking bar. Deal with it. Right? Take it. Okay? But guys, all you have to do is pull up one of these charts. Yes, I'll show you again in a minute. And I mean, all you got to do is go back and see them for yourselves. I mean, we saw this one here that went up hundreds. This one here, 150. I mean, let me just go all the way to the left. I mean, you can just see these. Now, sometimes, you'll see them and they'll break out one and pull way back, and then you go 100 down. You'll sometimes see this too. Well, it kind of faked you out. It went up one, made a pullback, and poof. But oftentimes you see the kinks and the burst, a couple hundred. The kinks, big burst, few hundred. Kinks, a couple hundred. Okay? See that? Just a different view of the market. Is that helpful just in and of itself? I'll show you in a minute how to open this chart. It's just something to keep an eye on. Okay? You like that? Would it be even cooler if I told you that Lori and I begged Greg, and Greg just released us something that Lori and I are going to test, and then we'll give it to you in the next week or two, which is an alert that will give you an alert after X number of bars. And you can change the X number. I think right now we have it defaulted to like 5. But after there's been 1, 2, after there's been 1, 2, 3, 4, 5 bars, up, down, you'll get an alert that says chop whatever. I don't remember what we did, chop whatever on NQ. So you don't even have to necessarily have this chart up in your face. You can have it in the background, and it will alert you when there's 4 bars of chop, or 5 bars of chop, or 6 bars of chop. Chop alerts, yeah, whatever you want it to say. And you can then pull the chart up and say, I see a big kink. Let me get ready. How cool is that? Okay, because I know what some of you were saying was, John, this is really cool. I like this, but dang it, John, where am I going to put this on my screen? I have too many charts. Well, you can hide it. You can make it small. You can put it whatever. But play with this. Take a look at this. Give me a week or two, and you'll have an alert. Like right here, for example, if you set it at 5, well, 1, 2, 3, 4, 5, it'll say, hey, 5 bars of chop on NQ. You can look and say, yep, it kinked. Get ready to go, guys. Boom. You don't have to sit and watch it. Okay? Chad, it happens at night too, man. And it happens. Chad's asking, does it happen just during the day or at night? Happens at night too, and it happens a lot overnight, like European session. Okay? And you'll see some big moves. Okay? So, bear with me a week or two. You'll have an alert. Okay? You can put it on your other charts too. Okay? So, another question. Let's say that you're seeing, 1 bar, 2 bar, 3 bar, 4 bar. But you get a sniper trade. Well, you know to follow the ranging rules, correct? Well, what happens if you get a simplicity trade? Does that mean you don't take it? I'm not telling you don't take a simplicity trade inside of here. But when you're getting up to the top of the already established range, do you want to leave your stop way back at the other line or move it way up? Yeah, you want to move it way up. I mean, you might be able to catch some good simplicity trades in a 50, 60 tick range. But when you already see this, let's say you're 3, 4 bars into it, you've got a box there, man. When you get to the top of that box, tighten up. Wait for the breakout to be confirmed, get a pullback, then try your big simplicity trade. Make sense? Yeah, exactly, Chris. Only if you can get in towards the bottom or the top, would you want to take simplicity inside of that to box the kink and burst, okay? So guys, real quick, what you would do is go right here and go new chart, okay? And let's just say, NQ. And right here under type, it says Apex Diagnostic. You just click this down and you click right here, Apex Continuum, okay? And for what I'm showing you here on NQ, I'm using 50 and 50, okay? That's what I call a 50-50 continuum chart. Leave this at 1440, okay? And then you just hit OK. That's it. That's what gives you those bars, okay? Now, as NQ, if NQ gets faster, I may go up in size. If NQ slows way back down, I may go down to 30-30, okay? You kind of just have to keep an eye on that and play with that, okay? I didn't click tick replay because I don't have order prints on here, okay? You know, what you've got to do for whatever market you're trading is you've kind of got to look at it and kind of adjust the charts to where you don't want to see chop all over. Like imagine if I made this a 10-10 instead of a 50-50. There would be up, down, up, down, up, down all over the place, right? You don't want that, okay? You want to see those small pockets of it. I also don't want to make it 200, 200, and I don't have any bars for 3 days, okay? You know, so, I mean, for ES, you know, maybe try a 20, you know, like a 20-20, okay, and see how that works for you. Okay, and if you're not seeing enough of them or not enough of a break, I think that's what I have my ES at, I think, or it might have been 16 and 16, but try that. Okay, like you don't want to have too many of them or too few of them, but that's all you got to do to open a chart. Okay, now I want to show you something. We're getting close to our time here, but do you guys want me to keep going? Show you a few other things here? Are you guys getting tired? You want to see a few more? Okay. One other thing I do with this chart, you know, I've talked to you about morning routines and looking at your 60, looking at your 240, looking at the 30 ticks, right? One of the things I use this chart for, and let me just back up all the way here. Okay, so I like to use this chart to help me look left, okay? And we talk about looking left all the time, okay? But it will kind of shock you when you start looking at some of this. Do you see just right here? And I'm kind of zoomed in, but do you see here 1, 2, 3, 4, 5? 1, 2, 3, 4, 5. Do you see all that right in here? Right here? Yeah? So if I just do a drawing tool, rectangle, and you see over here there was 1, 2, 3, and right here 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. So do you see those three right there? Kind of all those kinks right at the same level? Just take it out into the future. See what happens. See it? Like, oh, and then it stopped there. Oh, 3 kinks there. Oh, 3 kinks there. Oh, 3 kinks there, and kinks there, and kinks there, and kinks there. See it? And then when the market comes back here, where did the market stop? Right there on its way back up. Well, when I draw it forward, where did it now become support for when the market popped right there? See it? Yeah, that's kind of amazing, right? I mean, look up here where it was, you know, granted this was a recent high, okay, but again, see the chop box? Boom, retrace there, boom, chop box there, boom, chop area there. Okay, let's come a little further. This is why I'm kind of trying to keep this zoomed a little more so we can see into the future. But so then we went through this big uptrend, right? Okay. big uptrend. Now let's look back. Okay, so after our uptrend, right? You guys all saw that, like up, right? Okay, so in this big uptrend, one of the things that stands out is right here, correct? Drawing tool, rectangle, you see it right here? That chop box? Draw it to the future. Bottom of that chop box has now become what? Like a resistance there. You see that? It's where the market stopped there. It's where the market stopped there. See it? And then what do you get? More chop right there. See it? What do you get if you draw it all the way over? Yep. See that? What about here? 1, 2, 3, 4. Right here. 1, 2, 3, 4, 5. Okay. Draw it. Draw it into the future. And no, you don't want to draw every single one. But when you see, okay, you know, I can see, all right. Oh, and then look. Boom, almost perfectly lined up. And then boom, another one almost perfectly lined up. When you saw this market, the market was up here, and you see it headed down. Boom, 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 boom. Well, yes, in general, you can say, well, this was the last low, so maybe that's the furthest it will go, but maybe it'll break this last low. I'm not looking at that low as a target. I'm looking at this stuff right here, drawing that into the future, saying, I ain't going past that. That's where my stop is being tight. Does that make sense? Don't be looking at this well, that was the last big low. Maybe we'll get there. No. Why would you think that? Because you got this crap right here to deal with that you need to draw into the future. And exactly right there is when the chop hit. See it? Okay. And if we drew that further into the future, and so on and so on. Okay. Does that make sense? It's kind of one of those other things that is kind of an easy thing to, exactly, Theo, kind of like a demand zone. It's kind of an easy way to look back and find some of those, look left and just find some of it. And you can really zoom out, right? And say, okay, like here we are. I mean, let's put this into perspective right now, okay? So, you know, we're right here, okay? All right, well, if the market starts shooting up, ultimately, where is my top end zone? Okay, well, I see a big old cluster here and a big old cluster here with a big cluster here. All right, well, clearly that's my end zone up top, right? If I'm in a trade going north, I ain't no way expecting it to break these levels without a 50 tick up, another big range. Yeah? So it's almost like I could draw that out into the future and say, okay, that's my end zone at the top. Don't go into that. If I'm taking a simplicity trade way up and I'm getting up here, tighten up or get out, go home, right? So, you know, that's my playing field at the top. Cool. Okay. Now, man, right now, the market's right in here. Man, it sure is kind of sitting in here. That's weird, huh? Is it? No. Why? Look back here. See that? And then see those? And then see those three? And then see those four? Of course the market's going to sit right here for a little bit. Does that make sense? Am I losing you? Big chop box there. It chopped here, 2 here, couple there, 3 here, 2 here. Boom, right here, chopped again. Boom, reversal, boom, 4. Do you think the market's going to go past this right here? Just no problem. No, you're going to have crap in there, right? You're going to get crap. Yeah, going to be a fight. Expect it. Okay. If you got some kind of trade entry right in here, it better just be a sniper scalp. Don't enter a simplicity trade right there, right? Makes sense? And if the market kind of comes down, you know, where's another potential spot where you might see some crap? Well, what do I have back here? Well, I've got that right there. I bring it over and I've got that right there. I bring it over, I've got some of that there. And then I've got that last one there. So when it comes down here, is it going to for a little bit? Of course. Should I expect that? Of course. Should I enter a trade right there and wonder, well, why didn't that just go? All you got to do is look left. So you see how this chart is helpful in more ways than one? Yeah? Okay. So make this part of your morning and routine and your routine throughout the day to, I'm gonna get you some alerts here in a week or two for the chop. But it's just a good thing to look at to see, just to put into perspective, where is the market? What is it doing? Was there some chop areas there? You know, where is my end zone? Where's my playing field for the day? It's really helpful. And yes, you can combine this with, hey, I'm also looking at my 60 and 240, and I'm looking at flux levels. I'm looking at a 30-tick chart with a bunch of big stacks of magnets and block. This is just another way of viewing the market. Okay, does that make sense? Yeah, had sort of stopped looking at some of those. Tony, what are you saying here? The region highlight? Ah, okay. Got it. Thank you. That makes sense. Okay. JS says, John, how does the 50 ticks differ from 30 ticks? Well, a 30 tick chart, what we call 30 tick, is a 30 tick diagnostic bar, which means after one bar closes, it's only got to go 15 more ticks to make another bar. 15 ticks. Here, it's got to actually go 50 ticks. Okay, so it's just a much bigger bar. Okay. That help? Give you a little something different to look at? Okay. Y'all want to see my favorite setup ever? Or my favorite, I shouldn't say trade setup, but my favorite market setup? Okay. Hold on one second here. And you can, I'm not just saying that, you can ask Daryl, Lori, or anyone. I swear by this trade setup for a while now. Okay, notice at the bottom here I had something squished, so I'm going to pull it up. You all know what that is, right? DR, okay? So think about divergence on your 10-tick chart, right? Market goes up, then it went up a little more, but on less volume, right? And that's divergence. Well, that's a little 10-tick chart. We like divergence on a little 10-tick chart, okay? No, this is not VAD. We're not going to actually discuss VAD, but this is DR. So if we like divergence on the little 10-tick chart, do you think divergence might have, in general, looking at the general market, looking at the bigger scope of the market, do you think divergence on a large chart might mean a little more? A couple people are saying, hey, what do you have on this chart? Okay, it's DR, okay? Setting of 22. Yes, Chris, exactly. Divergence can have a little more weight to it on a larger chart, okay? Now, I want to stop all of you real quick. Stop trying to open a chart. Stop trying to play with settings. Pay close attention to what I'm going to say right here, or you'll screw yourself up big, okay? Like, stop what you're doing. Divergence on this chart. See how the market came down here? And you see where this DR is, right? Then on these bars, DR is lower. Everybody agree? DR is high, and then DR is low. We would normally look for that in divergence, right? Higher DR and then a lower DR. That right there is not divergence. Divergence cannot, okay, listen close, because I have shown some people this before and they've screwed it up because of this piece right here. Just because DR goes way down is not divergent in the chop box. Divergence cannot happen in the chop box. Just because it shows bigger DR here and less DR here, it's in the chop box. Does not count. Does that make sense? Okay, now, what I do consider divergence for this, where's just the dang arrow? Here. Here to here is divergence in the market, okay? This is the chop box. No, okay? Also, what did I just click? Dang it. Whatever. Also, here to here is divergence, meaning the market came down and made a low, right? This is not a lower low in my opinion. It has to actually close lower outside of the chop box and then have a lower DR to be considered divergence on this particular chart. Does that make sense? I know I kind of had a struggle to explain that properly. Does that make sense? Because I've seen so many people say, well, right here at this down close, DR was way up here. But then over here with some of these wicks, DR was here. That's divergence. No, it's not. If you've got a chop box, you need an actual push further with a close with lower DR. Makes sense. What happened after that? This is today, by the way, guys. What happened after a 50-50 tick continuum chart with divergence? What did the market do? No, Karen, I do not include the wicks in the chop box. I'm looking at basically that first bar down of the chop box. Where was that DR? And then an actual full close down again. Where's that DR? Okay. Yep. Shaylin, exactly. There's another one. Okay. Right here and right here was a little bit divergence and went up 150 ticks. But then here down to here is another divergence and went up what? 50, 100, 150, 200, 250, 300. You see that? Okay. So when you see divergence, okay, does that make sense? The one that Shaylin just pointed out there? The other one right here? Here to here. And why am I having so much trouble finding that damn thing again? And there to there. See that? Lower low, less volume. Okay. So let's say that you're monitoring this chart and you see a divergence in the chart today at 1309. Okay. Could be losing some steam, right? And you get sniper trade to go north. Or your 30-second chart starts to turn around, turn around, turn around. You see some volatile trend lines start to change color, and you get a sniper entry. I mean, a simplicity entry to go long somewhere down in here. How do you feel about that entry? Right? Feel pretty good about it. Makes sense? Same here. Markets come down, went into a chop, went into a chop, went into a chop, little break, push down more, lost steam. You get simplicity in here to go long. Feel pretty good about it? So when you see the divergence in the big picture, the big scheme of things, and you get an entry to go the other way, does that help with the probabilities versus the possibilities and all that? Help you feel more comfortable? Okay. Now, I do also watch, I have up, and you all know this, a 30-tick chart. Okay. I have a 30-tick diagnostic chart like we've taught in the past and all that. Okay. I want y'all to look right here. So let's go back here. So market's coming down, comes down further. We've got divergence on a 50-50. That's a big deal, right? Notice this time frame here is about 1430. Okay. I'm going to go over here to 1430 on my 30-tick chart. What do I have on my reversal bar on the 30-tick? This white line right here. I asked you if y'all wanted to see my very favorite setup or market setup. Mini magnet. Yeah, and with a cluster, but the mini magnet. Guys, have y'all ever stopped and looked at a 30-tick chart where reversal bars, and I don't mean just any little chop crap, but I mean a reversal bar has a mini magnet on the 30, like right there, boom. Or like right there, boom. Or Right here. Boom. By the way, these are 30 tick bars. So that's 15, 30, 45, 60, 75, 90. That's a lot of ticks. A mini magnet on the 30 tick chart at an extreme is powerful. Powerful. Okay? Look back here around 1430. Look right here at 1430. If I have a 50-50 chart, that's a big old view of the market, and it's divergent. Like a big picture view of the market is divergent. And my 30 tick has a reversal bar with a mini magnet at the bottom saying, we're leaving you down there, you're done, we're pushing away from you. How do I feel about the new freaking direction of the market? From 12,032 up to 12,140 something, 100 something points. Okay, that is my favorite market setup right there. Okay, and not just because this cool little moving average crossed this cool little average and some arrow popped up. No, there's a reason behind it. Okay, right? And more than one reason behind it. The big chart is divergent. The other big chart is rejecting with a mini magnet. Okay, when I see that and I've got a mini magnet on the 30, that's it. Okay, I'm looking for simplicity. I'm looking for a sniper. I'm looking for, yeah. Now, let's look. Here's an interesting one. Remember this? Again, today, big kink, burst breakout, pull back, up, 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 up. So as the market's up here making these 3 bars, okay? Jess, we're not trading on the 50 tick, okay? So he asked, what is the stop loss of 50 tick? We're not trading on the 50 tick. We're still trading on our other charts, sniper charts, simplicity charts. We're just looking at this for opportunities. So this is very important. Let's just use this. Okay, so right here, this up close bar, then we had a down, then we had an up. But I'm looking at this last up close bar. Okay, then it went up here, right? So this bar right here was the DR. Right here. This bar, the DR was much lower. Everybody agree to that? The market came up, chopped around, went up higher. So the market made a higher high, but volume went down, DR went down. Everybody see that? Yes? Everybody agrees? Yes? Look at the time around here. 11:31, and this bar closed down about 11:40. 11:31 today. 30 tick chart. Well, come on. Market was coming up, 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 up. What do we have right here on OD? 29K. It went up higher, and we had what? 14K. So we had a 50% right there on the 30 tick. So not only do we have divergence on the big one, we also had divergence on the 30, didn't we? right? Everybody agree? But what's the other big thing we had on the 30? Right there, like I said, when it rejects at those extremes and at those highs and the 50-50s divergence, and you've got a mini magnet on that reversal bar. See it? I mean, that bar closed down at what? 12,166, and the market went down to 12,077, 90 something points, 360 ticks. So when that market setup, that market behavior happens, divergence on the big one, and especially if there's also divergence on the 30 and you're rejected, let's say there's levels there, there's stacks there, but that mini magnet that really shows the rejection and the market's starting to go the other way, how do you feel about any sniper shorts or a simplicity short right there? Especially, how do you feel about a simplicity that sets up short but then makes a pullback for a low risk entry and just ride that sucker down? Yeah, or Doug says, hey, even a way to avoid some longs. Exactly. Right. Okay. So, like I said, a little bit different webinar tonight, and I've gone way over. I'm not trying to teach you a new trade setup. This is not a different entry. It's a completely just a different way to look at the markets on this bigger chart, spot kinks and burst breakouts to help you get ready to know when the market might be moving, spot the divergence and the weakness, and then pop on over and also look at a 30. These don't happen all day, every day. Divergence here and a mini magnet over here. They happen multiple times a week, okay? But they don't happen all day, every day. But when they do, boy, you know. So Doug says it was super helpful. I'd like to see more webinars. Well, good. I know this wasn't what y'all were expecting tonight. Y'all were expecting Daryl to do a walkthrough of Sniper. I just wanted to show you a little something different, and just people have asked me, John, what do you trade? What's your little? Because you know, some of us that have been around a long time, we trade the Apex systems, but we add kind of our own flares to it, and these are just things that I like to look for. Okay. Let's see here. I'm going to take a look at a few questions. I know I answered most of the questions along the way, but and I don't want to keep you too much longer here. I hope that was helpful for you. Hope you guys can start, taking a look at this tomorrow. Okay, some people are asking, hey, how do you trail with the 50 ticks and where's your stop? We're not trading off the 50 tick chart. Okay, once again, we are not trading off the 50 tick chart. We're looking at it for an overview of the market. We're still trading Sniper off of our 10 tick chart, or we're trading Simplicity off the 30-second. We're not trading off this. It's not a new entry. It's not different trailing, different stops. Okay. I'm in Central time zone myself. Okay. Abdul, on the DR, when you add the DR on, I use a setting of 22 on DR right here. The strength, 22. Okay. This paired up with Sniper and Simplicity will be powerful. David, exactly. And that's the point. That is exactly the point, David, is, pairing it up to get a different view of the market, to know, hey, here's when the good shot will come. Or here's when there's a higher probability of the good shot to come. All right. Christopher, yeah, let's say different personality, what works for them, or they're just trying to be like DM or to be like Lori, or yes, yep, just show a little bit different view. You know, I have a little bit different trading style than Daryl has, and Lori has a little bit different trading style than both of us have, and Craig's got different things, and Marion's got different things. You know, we're still using the Apex tools and the Apex systems, but we look at some other things, okay, and ways to see the market. Yeah, Jack, we can look at get some templates together as well. So, do you make the box with the wicks? Yeah, Matthew, I think it's good to make the box with the wicks, okay? But what I'm looking for, like right here, for example, Matt, like right here, technically, yes, I would want to draw the box with the wicks because that's really like the range, okay, if I'm looking at the range. But for a breakout, what I'm just looking for is that first fully closed bar. Does that make sense? You know, it doesn't have to be like a certain amount of ticks past the wick. You know, I'm drawing the box just to cover the whole range. I'm looking for that first breakout bar, and then I'm waiting for the pullback. I don't want to just get in right here. You know what I mean? I like for it to break, and I want some kind of pullback. And I'll see that pullback on the sniper chart or on the simplicity chart with a low risk entry, and boom. Okay. So guys, you think y'all could open one of these charts up and take a look at it? Keep an eye on it tomorrow. Look for some kinks. Wait for some breaks. Look for some divergence. Get a handle on it. Let me know on one of the next webinars I do how it's working for you. Or maybe we can do another webinar on this and dig a little deeper, do some reviews. You know, if that's something y'all want to do, I'll put it on the list to try to do another one of these with you. Okay. Yeah, Theo, I've done some with the VAD on the 50 continuums. I use that a little different. Maybe we can talk about that once. Okay. And then in a week or two, try to get you some chop kink alerts. How about that? Yep. Awesome. Okay, guys, we are way over here. Sorry to keep you so long, but I hope this was the bomb, as Todd says. All right, guys, thanks so much. I know we do a little bit different webinars when I hop on with you, but I think it's good to mix it up a little bit and show you some new stuff. So head to bed, get some rest, get some sleep. Thank you so much. Matthew, the strength on DR is 22. I put it at 22, okay? Thank you, Jody. Appreciate it. All right, guys, have a great night. Get some rest and hop in the Elite Trade Room tomorrow morning. All right, we will see you next time. Thanks, guys. Bye. You're all very welcome. Thank you so much for the compliments. I'm glad you enjoyed it.